Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we can trade the next following day with much more clarity and confidence. In case if you like my simple way of analyzing Nifty as well as sharing my setup and price action concept with you guys, please like the video, subscribe to the channel, share it with your trading friends, and as well as put down anything that you might have to say in the comments box. All right. So on that note, let's just start with today's video. We'll first start with what we had analyzed for today versus what actually happened in the market and how did we trade that. And then we'll plan the trade setup for the next day. Right. So yesterday, what I had clearly mentioned was that today I'm expecting it to be a sideways day with not much of a momentum on either side. I had clearly warned not to take any direct breakout entries around these levels. Most probably that would be a trap, and that is what happened. Nifty opened with a slight gap down. In the first candle itself, it went up and then immediately got the rejection from those levels, right? This was the 0.318 to 50% zone of the basically from this particular zone I had taken and till around 50% of the entire move of yesterday. And if you can see, Nifty took support from this level multiple times. Were they tradable? Not as per my setup, but if you look at the uh, move that came from this particular zone, they are enormous. So even if it might not look much from here, so if we take this low from to this high, it's roughly 172 points. Then again, the second time it came here, formed a double bottom, and around here, the move again around 100 points. Then from this particular low, to this high again, almost a 200 points move. So this zone had provided the kind of support that was there. So even though on an intraday basis the structure was of a lower high and lower low formation, I was not willing to short the markets around these levels because you do not short the market at support. Right, same was the logic behind when a double top was formed over here again with a breakdown. A breakdown did not come as in terms of closing, but yeah, the a low for was formed, and then the market gave a pullback, and then again gave a good move on the downside as well. But this is something which is going against my setup of selling the support. Right, what we do is we look at buying opportunities around the support areas and not look at shorting the markets. The only trade that formed as per our discussion yesterday was around here when market closed below this, uh, gave a small pullback and then started to continue around here. This is where I shorted the markets. My SL was placed right above this particular red candle, which was the entry candle. I got out somewhere around this candle, right? Because even though market had broken down below the 50% zone that we had marked, so this particular line is the 50% zone, and I expected it to fall with momentum if it had to, although I was prepared to not expect some any momentum today. Uh, but because my entry was there and I got out almost at cost, a couple of points just captured. So that was it for today from my trading side. All right. So there are days when I told you with days like this, when there's a good momentum, you get to this is followed by a day which has got a lot of manipulations and volatility. So in case if you look, this was the structure which was forming. Market was forming a lower high, lower low, lower high. Then again, this particular high was breached around here, forming a higher low as well. But then again, the structured market structure which had changed around here did not confirm by breaking this particular high. So if this would have broken, this would have given us a change in market structure, and then we could have again taken a bullish entry from our support zone, which was around these levels, right? So but that did not happen. Obviously, we were expecting some volatility around these levels, around today's market, basically. So what happens after big move days like this is what you expect, right? So I hope our analysis yesterday was bang on, point on, and today we saved ourselves from some false or fake trades and fake breakouts, and as well as did not get trapped on the wrong side, right? Now let's just start with the daily analysis, daily candle. So what we can see here is market formed a good red candle, which is a halt candle after such a big move. Market, now there are a couple of scenarios. Market can go sideways around here for a couple of days, trying to form again, consolidate in a triangle, in a straight pennant, basically, or maybe in a rectangle area as well, which would be like the flag, the pole and the flag and consolidation, and then continue the upward journey. If it continues straight again, it would be a bit difficult to trade. If we look at again on a 75 hour minutes time frame as well, there are two major support areas that we can, sorry, that I can see around here. Right. Okay. So this is the entire up move which was there, more or less, right? And so the first support that will come will be from these levels. So you already know, people who've been following me, that I give a lot of emphasis on this particular fib retracement zone. So in case of trending market, this is what I look at, market to take support from around these levels. And plus there is the big gap border around here. So if we just change the color for this gap border, so these are the two major support zones that I can see around here. See, right now, my more bias would be on the trades which are uh, on the bullish side, wherein I will trade with much more quantities, with my regular quantity, than which much more confidence to hold on to the trades. Whereas on the short side, I would be much more careful. Now, there is one trade that I would like to discuss here, which occurs a lot of time in Nifty when we are in a bullish scenario. On day one, the market gives a big up move in the bullish side, which is the primary trend. The second day, market gives a retracement, closes near the day's low. Now, right here, the day's low would be very, very important for us. Also, try to note we are also near a good support area. If market opens with a gap down, if market opens with a flat opening, gives us a closing, gives us a candle like this, right? For understanding sake, we'll make it a red candle, gives us a negative closing. This would invite fresh sellers into the market, but since the overall trend is positive, as soon as the high of this particular candle is taken out, we can expect a good trade on the upside, right? So this is one trade which I will be keeping my eyes on early in the morning, right? In case of a flat opening or a gap down opening around these levels, once market is again based on price action, uh, we can look at creating a long if market reverses around here, right? The second would be, say, for example, this particular trade does not form like this. These are just our preparedness that we are planning to trade in a particular way, not necessarily the market is going to do that, right? In case if market comes and we can uh, gives us a double bottom kind of formation around these levels, we can again look at creating a long entries over here. This is an entire zone of good support right here. So this is the 50, the yellow box is the 50% retracement of the entire down move, up move from here. And this green box is the gap border area, which is here. And gap borders usually, such as the big gap borders, usually give us good trading opportunities. And also there is a concept which is known as an explosion gap pivot or explosion pivot gap, something like that. I'll just explain the concept in brief. So there is a gap which is pending to be filled by the market. In case of the price action which is negative in the market, market comes down to uh, I'll just draw it around here for understanding sake. Market comes down here to fill the gap, fills the gap incompletely, as in market tries to fill the gap but does not fill it completely, and then reverses around here, forming a price action. You can create a long entry based on the explosion gap pivot as well. That is something on which you can take an entry on a candle which forms a low, and there are two preceding candles which have their lows higher to the from this candle low. I'll just make a quick understanding of the entry candle which you can trade. All right. So this is just rough. Don't factor in much about the color of the candles, right? In case if market goes down to fill the gap, this candle forms a low around here. The preceding two candles should have higher lows, and the preceding two, the for further away, the next two candles should have a higher lows as compared to this particular candle. So this is called as the Decox pivot, and this Decox pivot, when formed around in an explosion gap pivot scenario, usually will give us a very good trade on the upside. And this is also again major support area. And so we see a formation like this, we can look at creating a long position around here. All right, so this will be my plan of action for tomorrow. Say, for example, the market opens with a, okay, I just keep this here. Market opens with a gap up. What are we gonna do? Market surprises us, and the market opens with a big gap up around this particular level. So around this level again, I'll wait for the markets to subside and form some price action in the first half, because if market opens directly with a gap up, it's going to create some volatility around these levels, and I'll let the market settle in for some time before planning any particular trades for the day. Uh, so yeah, that's it from my side for tomorrow. I hope I have been able to add some value to your trading, to your knowledge. So guys, again, a sincere request, please like, subscribe, and comment on the video. That will be encouraging for me. With that note, I'll take a bit adieu to you guys. This is all from me for today. This is your Nifty Guy signing off. Cheers. Have a good day. Thank you so much, guys, for tuning in.